Good morning, everybody. Great to see you here on the Impact Money Show. You're watching on your TVs in Texas and Louisiana, as well as around the world on our partner platforms like Facebook and YouTube and Instagram, Rumble, and all of the rest. So we have a lot going on today. Big pop in the decent pop in the markets. Yesterday we had a bit of a pullback. Appears to be with the killing of Sinwar, the Palestinian guy, that we had a pop in the markets. May have been correlated, may not have been. Could have further to go down, but we could go up a bit. In the small time frames, a lot of times these things become harder and harder to predict with technical analysis and the rest of these things. So we will talk more about that, more about what we see in the charts a bit later. The art of war, money laundering, aid money stolen from Americans and given to Ukraine and Israel, causing inflation to skyrocket. We're all feeling it. Magic electronic voting machines, mail-in ballots or in person. How are you going to do your voting on November 5th? What do you think counts more? In person, magic electronic voting machines, or the mail-in ballots? Which do you think counts more? Or which do you think will be counted? Funny story. When I moved back to DC, I requested a ballot, a mail-in ballot, I guess, or maybe I registered to vote here. My wife did too. My wife had previously voted for Democrat, and I had previously voted for Republican. And I think the only election, I guess Obama had been elected after that. I voted for Bush back on the Hanging Chads. I was down there in the Palm Beach. I did the little poke. Naturally, just checked to see if there was any, see if it went through. It did. And so I left, and that was it. And then, of course, if you were around for that time, you experienced the Hanging Chads and everything else. Florida Supreme Court got involved. Of course, Bush was given Florida, and the rest is history. Florida was the deciding state that year. The whole process was pretty hokey. It was hokey. Who knows who got more votes? There was really no way of telling. Once those ballots got shipped around and in this car and in that car, and the ballots kept showing up. So they've been at this for a long time. That was back in whenever Bush ran. A long time ago, it seems like. Well, we had September 11th of 2001. So yeah, we're going back a ways. I suppose that was the 2000 election. So that was, but I decided then that this stuff was rigged. Even though the guy I voted for won, this is rigged. If the Florida Supreme Court had been Democrat controlled and not Republican controlled, it would have been a different story. Anyway, I'm interested to know how you plan to vote. How do you plan to vote? Because I will go on election day and vote. I do it right here. You know. Anyway, all right. So we have a lot going on here. We have, of course, there's some legal wrangling still, and of course, right, with Trump. So Trump is under fire all the time. They really don't want this guy to run. The financial aid, especially in times of war and crisis, often intervenes in concerns over corruption. As my father always told me, all wars are bankers' wars. They're all bankers' wars. So we're funding both sides of the war, and people scratch their head about it. But you got to understand, the war is not for us. It's not for you. They play it in the controlled media that it is, but it's not. And by printing up all that money, all those hundreds of billions of dollars, of course, that dilutes the money supply. It's not like it's just going to China and China's holding them in their banks. So China, I never understood that when I was a kid, right? Well, China is holding our debt or this and that. China is holding dollars. China was holding dollars. Now they're not really holding that many dollars, right? Because they don't need them. That was our whole scheme of the euro petrodollar. The petrodollar. We had the petrodollar, and that, of course, backed, in essence, the U.S. dollar. Of course, we don't have that anymore. So, no reason for Russia to hold, unless they just want to, hold dollars or any other country. But basically, with that system, we fleeced the entire world with our dollar, with the U.S. dollar. And I say we, it wasn't really we, it was the Federal Reserve. The banking cartel fleeced the world with the dollar. They fleeced us too. And they kept diluting the money supply. And by diluting the money supply, of course, we lost our value, and inflation, of course, not and, as inflation skyrocketed. So when we send over billions and hundreds of billions of dollars over to these war countries, like I said, they use the money. So it's not like China or somebody like that is just holding it in their bank on their stuff, right? These countries are using the money. They're buying arms, they're this and that. And you can argue that, oh, well, that's good for the U.S. economy because they're buying arms from us and everything else. But the fact of the matter is they're taking the money from you and me. So whereas it might be good for the bottom lines of these companies, and it might be good for stockholders of these companies, overall, you're stealing the money from the poor and stealing the money from everybody across the board that's in the U.S. dollar, the poor, the working class, everything like that, and giving it then to the wealthy, the military-industrial complex. So that argument does not hold water with me one bit. Okay? Doesn't hold water with me one bit. So now, the other part of this is, of course, the money laundering that goes on is absolutely just out of control. I mean, you can imagine you're sending over $100 billion. How much of that gets sliced off? How much, does Congressman so-and-so get a slice for, putting together this arms deal? How much does a guy like me get for putting together an arms deal? How much does, Senator so-and-so get for introducing a couple people? And that's not illegal, just commissions on sales. That's it. There's no laws really against that. So that happens, and it is happening right now. So you have that part of it, and then you just have, again, like, okay, they overcharge. What's this cost? What's that cost? Of course, now Zelensky is going around the world, flying on his private jets and stuff, and you know, just like Israel. So Netanyahu and Zelensky, they're like cousins, right? And they both have taken over their country and canceled all the elections. So you have a guy that now is pushing all of this war and everything else, who is not even having to stand in front of the people for an election. So Netanyahu canceled the election. He said, after this war, we'll figure it out. And Zelensky, he also canceled the election. As well, you have North Korea. North Korea is now sending over a considerable amount of troops, like 10,000 troops, over to the Ukraine. And that has potential to really make this even a wider war, right? World War III is being thrown around. Over 1 million, they're saying, of people have passed away, have died horribly over there in the Ukraine. 1.8 million was the estimate I just saw. I don't know if that's true or not. That's an absolutely horrible number. Anyway, and then, of course, India has been, as well as I understand, supplying Israel with troops as well for quite some time. Let's talk about the markets. I have the market report with the great Matt Dixon. Matt's going to give us some more insights on everything here. He always does a great job with the Market Watch report. The great Matt Dixon. Finishing up the week here, I have a recording. He put a recording together for us. So just a lot going on. How to play the markets, what we expect, how we're playing it. Let me just go ahead and get this on my screen here. This is the Market Watch report. There we go.
Morning, Bruce. Morning, Impact Money viewers. Great to be here again. So, sorry, I had some problems yesterday with the computer, so I've got a brand new computer here. Hopefully no more issues. It's a much bigger screen, so a bit easier for me as well. So today we're going to look at correlations in the market. So correlations are really important because sometimes you can have an asset which is easier to predict than another asset, perhaps. It may have a longer track record history. So for example, with cryptocurrencies, they tend to have a relatively short history. Obviously, Bitcoin since 2009, so reasonable history there. But there's a lot of newer tokens that don't have that sort of track record. And even Bitcoin, 15 years or something like that, is actually not a long record to look at when you can look at things like bonds, dollar, et cetera, that go back many, many years. And we can see the trajectory of those assets. And if we can see a correlation, either positive or negative, then we can hopefully deduce things about where a price is likely to move in the future. So, for example, if we look here at dollar index, which is the candlestick chart at the top, that's the dollar index. And the chart that I'm going to put against everything today is just the SPX, the S&P 500. So that would be the red line here. So straight away, we can see that long term, there is an inverse correlation between the SPX and the DXY or dollar index. So dollar index here, as I say, when dollar index tends to rise, we tend to see the SPX falling. So in other words, the stock market's falling while the dollar is strengthening. And conversely as well, whilst the SPX is rising, we see dollar index falling. So a weaker dollar tends towards stronger stock markets. Short term, the correlation doesn't always hold, and we'll see that even right today. We can see it's not quite holding at the moment, but long term, very clearly, there is a correlation. And this is why short term, you often get what's called noise in the market. So noise is often something you can't really predict. It's quite random. And there's a lot of volatility there that isn't necessarily tied to other indicators or data. And that's why short-term trading is actually quite risky, and you can make better decisions usually over the long term. But bear in mind, long term, the price movements tend to be exaggerated, tend to be bigger. And so there's a lot of risk involved in taking long-term positions when the price can move against you for a substantial period of time. So just for example, we can see here that we had a peak in the SPX June the 16th this year. We had a peak, and then basically it fell sharply, but also we had a peak in dollar index, and that also fell sharply at the same time. So there was a direct correlation between SPX and DXY. They both fell at the same time, but that's not usually the case. As we can see, long term, they go in opposite directions, but we see here short term, they actually move together in the same direction. So that's why short term correlations don't always hold true. But if you can have in mind that a longer term correlation is definitely there, then it gives you some confidence about taking perhaps longer term positions. So bearing in mind at the moment, SPX is once again at new all-time highs. It's done amazingly. Dollar index has been in the doldrums, but it's picked up a bit recently. That would potentially be a warning sign that one of these is going to give. That basically you would think as the dollar's rising so dramatically, it would affect the prices of equities, things like SPX here, the S&P 500. As I mentioned yesterday, I think the reason behind it is that the dollar index is actually a basket, it's compared to a basket of currencies. We just saw the European Central Bank, the ECB yesterday, lowering interest rates by a quarter point. That's the second consecutive fall. And Lagarde, the finance minister, said that she was basically doing this. The interest rates were being reduced to try to ensure a soft landing and to basically try to stimulate growth, because inflation is now 1.7%. That's way below target in the Eurozone. And so they need to start trying to stimulate some growth. Growth is falling off a cliff right now. Same in the UK. We're having real problems with growth. But the US growth is quite robust still. It's not running away too fast, but it's actually quite robust. So that is one of the reasons why we're seeing strong dollar. And that's not necessarily a bad thing at the moment for the SPX, for the S&P 500. So that's why we're seeing at the moment they're moving in the same direction. That's unlikely to continue long term. It may even be that this is because of the run up to the election, that typically we tend to see a run up in asset prices as we get towards closer to a US election. And that's actually been the case many, many times in the past. The biggest notable exception was, I think, back in, 2008, where basically, I think it was an election year and we saw a massive reduction in asset prices. So that's just one of the, so it just shows you can never be absolutely certain, and why with every single thing that you look at in the markets, there are always exceptions to prove the rule. So you can never go 100% behind the conclusion that you take in the market. So quite interesting, as I say, there's an inverse correlation there, but because it's breaking down at the moment and there's actually a direct correlation right now, starts to make me think, and these are things that make me ask questions and say, is this sustainable? And so we'll look at the SPX perhaps on a shorter time frame. I'll just move to that now, actually, just to show you where we're at. We'll move to the 4-hour, for example. And here we can see the direct correlation. It runs against the long-term situation, where there's the inverse correlation. So here, direct correlation with the increase in DXY. So I'm just I might actually remove this SPX, because it's a bit confusing seeing two charts. But what I would say is the RSI here is against the dollar index, and we can see that it's peaked out already, and we're actually seeing some divergence. So we're seeing higher highs in dollar index, we're seeing lower highs in RSI. That's basically telling us that there's exhaustion happening with dollar index, I suspect. So I think it's overdue for a pullback in dollar index. So again, not quite sure how that will impact the risk assets like the SPX. So we've got a number of things going on the geopolitical front, and they're probably the biggest risks at the moment. But we do have risks, obviously, on the macroeconomic as well. We've got an interest rate decision coming up in a very short time now at the end of the month. But geopolitically, I even heard this morning that North Korea are potentially sending, I think it's 10,000 troops to Ukraine to interfere in the Russia-Ukraine conflict. That will once again, as Bruce loves my saying, set the cat amongst the pigeons. Geopolitical unrest, from something like that, and they say that's even a precursor potentially to world war. These are big things that are happening that are being ignored at the moment in the market. There are serious risks out there. So whilst the market is looking really rosy, with the election coming up, etc., things looking really good, there are big risks hanging about behind the scenes that I think we need to be aware of as traders. Quite interestingly, when we look at these correlations, oil is actually, and again, I'll probably go back to long term to look at longer term correlation, if I can. Yeah, so again, we can see oil here. There's, in general, again, pretty much an inverse correlation between oil and between SPX. So obviously, well, I say obviously, but when oil price is cheaper and cheaper, it's probably good for business. And when oil price gets really expensive, like, for example, at the height of the Russia-Ukraine crisis, when oil was sky high, we saw basically the SPX selling off. And so when oil prices are high, it's obviously a drag on business. It means transport is expensive. It means heating is expensive. It means the cost of energy for business, even for consumers, for all sorts of things. The costs are high. It's a drag on business. And so you would expect, and it's exactly what we're seeing, that when oil prices fall, SPX rises. So that's one of the reasons why I think at the moment we're seeing a really good rally in SPX, new all-time highs yet again. And that was called out by us. We expected that for some time, that things are looking very positive for risk assets. But there are risks out there, and there will be a turn at some point. And we'll need to look at oil. I think we'll look at it now on a shorter time frame to see potentially where we're going to go with oil. So again, on a shorter time frame here, the oil price is the candlesticks here. So we can see that potentially there is room to move lower in oil. The movement up here didn't cross over this movement down here, so potentially that's all good for a 1, 2, 3, 4, 5 movement down. But I think if oil price does move lower, then before long it's going to reverse much higher. And remember, when oil reverses higher, that will be a big drag on business. But we've got counter forces at the moment. We've got deflationary pressures, that's prices coming down, inflation coming down in everywhere except the US, I suppose. But when I say prices coming down, the price on the street that people are paying for general goods is still high inflation. Prices are going up dramatically. But when I say prices coming down, I'm talking about for business here, we've got the price of oil, for example, which is a big part of business expenses. So here, as I say, it's looking as though with the crude oil futures, we may be pushing up short term. We may even get a bit of a spike in oil, especially if something else happens in Israel. But what it looks like is going to happen, I think Bruce may be right, that all troubles are going to be held off until after the election. So we'll continue with weak oil. But then following the election, we may see some eruption geopolitically, which would potentially cause oil to absolutely rocket at that point. So for now, maybe a bit of more downside for oil, but then I think we're going to see substantial upside, which will be a big downturn for risk assets. So I think I'm going to try to remove the SPX here and just focus on the charts alone. Otherwise, it's a bit too confusing. So as I say, here we're looking at oil, looking corrective here, and I think we'll probably get some more downside before we then push stronger to the upside. So I'll go back to my usual assets. So we've had a real strong bounce overnight on Solana. Again, it stayed within, I think first of all, we'll go back. We can see, before I do, we can see here the divergence we had. So here we had lower highs in price corresponding higher highs in RSI to very much overbought RSI. That was to this point here on price. And we can see that the Solana price fell quite sharply. We actually fell to 147 something yesterday. So that was a big fall in Solana, but now we're moving up very rapidly. That appears to be potentially a three-way move down in Solana. So we may be pushing up to another high before we get the next reversal. So again, putting jigsaw pieces together, it's looking as though we might be seeing a bit higher in risk assets as we get closer and closer towards the election. But I'm still cautious because longer term, if we scroll out a little bit, go back to the daily. Let's just see, let's just move that. So when you go onto the daily, you can ignore these divergence measures. It's different on different time frames. So the divergence doesn't show at the moment on the daily, but it did show very clearly on the 4-hour. But what I'm saying is potentially we have here the A, B, C, D, E triangle. Now it may be that E isn't complete here. It may be that this E wave here, if I can move it, may actually be complete somewhere over here. So we could potentially again get a touch higher on prices to meet this trend line. In fact, if you look very carefully, I know I said E wave can undershoot or overshoot. So this is actually a perfectly valid end to the E wave here. So we may have already turned lower, or we could push higher. We could even pierce this trend line above because E wave can go above, below, or it can meet the trend line, but it's not much above or below. We're talking maybe a maximum 10% of that particular wave. So with there or thereabouts, again, from a risk reward perspective, I think if we got close to this trend line, again, I'd be interested in selling with a very close stop loss, just in case the price does take off, as it potentially could. We never know. But from risk reward perspective, the risk would be a small stop loss just above. The reward would be a potential massive move down to probably below the start of the triangle at 109. So massive risk reward in your favor. But I would just wait for price potentially to go a bit higher before I entered into that trade. Looking promising so far. As I say, we had a really good rebound from 147 yesterday. We're now 153.89. We're almost 154 now. So Solana is looking really positive there for today. And in fact, across the board, there's reasonable positivity across assets. So that's Solana. We will just look at Bitcoin again, very similar. We've got this triangle. We may have had, we may actually potentially be moving impulsively higher. So again, we could push much higher, or it could be the kind of triangle I've mentioned here, A, B, C, D, E triangle. And the E wave is clearly overshooting. We haven't yet reached the previous peak there, which was the high was 68.424. We haven't quite reached there. We're at 68.200 now. So very close to the previous peak. We could just exceed it. But we're getting close to a potential invalidation of this being a triangle. And if you were to push substantially higher, that would basically mean I think this triangle will be invalidated. But that's okay. We can have these ideas and they can be invalidated, and it will inform our future trading strategy. But for now, I'm still holding with the triangle, expecting a potential reversal downwards. The only positions I would be entering right now would be, for me, I'd be looking at short positions. But in general, I'd actually be staying out of the market right now because there's so much uncertainty, so much risk hanging over the market with the election so close, with interest rates so close, with geopolitical tensions, and with economies, very mixed fortunes for economies. So I'd personally be keeping my powder dry right now. But Bitcoin, as I say, we've had a really nice run of late. And it's actually looking potentially as though it's 5 waves. I will just check whether we have any Fibonacci relationship. I know we had that young man yesterday, and I need to look more into that, about the universality of Fibonacci measurements. So anyway, I've measured the first wave, transposed the second. Quite interestingly, I wouldn't call this a third wave as yet. Third wave for me normally is minimum 1.618 times the first wave. So we could potentially reach up to, if it is a third wave, or even if it's an ABC. If it's an E wave, by the way, it should be ABC. So it's perfectly reasonable for the C wave to be 1.618. So that would give me a potential limit to the upside here at 69,195. Here I've got 69,189. It's there or thereabouts. That's the potential upside limit, I think. And then I would, that would be the last point at which I consider taking shorts. Anything above that, I'd take my stop loss and take a loss on any short trade. Because if we break that level, then I think we probably are heading quite a bit higher. But for now, that is a very interesting risk reward level, that 1.618 times the first wave here. So keep your eyes on, remember it, but make a note of it. 69,189, around 69,200-ish area. That is a line in the sand for me for Bitcoin. So as I say, very, very important. So if we just look at the, Ethereum's not been performing quite so well as Bitcoin. Again, we appear to have very much sideways consolidation, A, B, C, D, E. Potentially, it's a triangle again. You can see there from the low point here, A up, B down, C up, D down, E up. And that E must be made up of an A, B, and a C. So a little bit like Bitcoin, we may just push a little bit higher, but not much higher. And then I think we get a turnaround. So for me, I think maybe this weekend, we may actually see a turn lower, substantial turn lower in the markets. So this is why I'm being very, very cautious, not entering long positions at this stage. You'd be chasing markets higher. And I don't like buying all-time highs in markets. So even if we looked at, just going back to the SPX, you can see beautiful all-time high we had again. Just going, that is the daily actually. Yeah, we had all-time high again. We're actually just pulling back a bit from that. I think this weekend we may see a deeper pullback in the SPX and other markets. So SPX, let's just have a quick look at XRP. Again, that's still held true that we had potentially an ABC higher, and I do think that we'll be heading lower in the XRP before we then push later higher. I don't know how much lower we'll go. There's big potential because this looks very much corrective to the upside. It looks like potentially a 5-3. We could get it. Yeah, it could be a big zigzag move. So potentially a lot lower to go. So as I say, I think this weekend might be pivotal. So let's watch out. I know Israel just basically, they say, eliminated the leader of Hamas who actually instigated, I think it's the October 7th massacre that started off all this current troubles. I know Bruce will have something to say on that. I'll let you say what you want to say, Bruce. But that was what appears to have instigated, certainly from Israel's perspective anyway, the current tensions. And so eliminating this leader for them is a big win. But they say the game, it's not over yet. And we say game, obviously we've got to think about the actual serious cost from a human perspective. This is a horrendous humanitarian problem. It's horrible to see the suffering and death on both sides. So I don't want to be too speak of this lightly. It's not a pleasant situation. But anyway, that's what I think we may see that boiling over a little bit and cause the sell-off in risk assets that I'm expecting for the near future. Just looking at, actually, I've removed it now. I might just put it back. But there's a really good correlation here with, let's just see, dollar yen. And let me just put in, what should I put in here? We'll put in, let's just see. Yeah, so put in dollar. And obviously there's going to be a correlation here, but we can see that, I said yesterday that when you see the Japanese yen is basically, when the yen moves higher, it's actually good for risk assets. And we can see here, the dollar and the yen, when you see strengthening of the dollar, normally it's inverse to risk assets. Same with dollar yen here. So we're looking at dollar yen. So as dollar yen rises, here we're seeing dollar strength, yen weakness. That's good for risk assets. When you start to see yen strength and this coming down, it's bad for risk assets. So let's just keep a close eye on the yen. It's the carry trade. It's the thing that actually funds all of these risk assets. So when money comes out of the yen into risk assets, it's positive. But if money comes back into yen, this chart will come down And that will mean that risk assets all come down. So getting a bit deep today. I think, as I say, I think this weekend could be pivotal. Let's keep an eye on it. I look forward to next Monday to give an update. But hopefully that's a little bit helpful for today. Just words of caution, we could have a rocky weekend ahead. So especially with news potentially from North Korea. So hope that was helpful anyway, and look forward to catching up Monday. Have a great weekend, everybody, and bye for now.
Great, Matt Dixon with the Market Watch Report. It is always a pleasure to have Matt on. And, Matt and I have been working with each other for a while now. We've done pretty well together. So it's always a pleasure to have him on. The market analysis that you get every day on this show is world class. It's world class. And we're really proud of it. If you follow our signals, and you trade smartly, with stop losses and everything like that, you can do very well, just like that. If you want to work closer with us, then that's a different story. But anyway, you can just do that and do pretty well. We've made some amazing calls on this show. That is for absolute certain. It will be an interesting weekend. We've had a pretty good run up here. So we could have a pullback, or we could, we talked about the wave analysis there. If the triangle is invalidated and we go impulsively upward, then things could change. And that's the way it works. You can't always predict how everything is going to go. You can look at it. You can use these numbers like the Fibonacci sequence and these numbers that are you see repeating throughout nature. But we'll always be honest with you guys. And if something is invalidated and it's different, then obviously we're gonna tell you that. So I just wanted to show you a little bit about the Fibonacci numbers here. Fibonacci. The Fibonacci. Hold on here. I'll pull it up. So the Fibonacci sequence, the Fibonacci numbers are numbers, and they're going to explain it a lot better than I do, that appear in nature over and over and over again. They appear throughout the universe. The great, let's see here, Fibonacci. I did play a video yesterday. We had a kid on here. He was talking about the Fibonacci sequence and everything. But this is the video that I wanted here. Just kind of I don't know if this is it or not. But anyway, this will work for the moment. Okay. So we talk about the Fibonacci sequence often on the Impact Money Show. Fibonacci numbers also have a practical applications in various fields, such as computer algorithms, stocks, market analysis, and even plant growth patterns. It's like the Swiss Army knife of mathematics. The Fibonacci sequence is a series of numbers where each number is the sum of the two preceding ones, usually starting with 0 and 1. So it goes like this: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, and so on. It's like the never-ending dance of digits. So I'll read that over for you one more time. The Fibonacci sequence is a series of numbers where each number is the sum of the two preceding ones. So 0, 1 is 1. 1, 2, 3. 2, 3 is 5. 3, 5 is 8. Right? And on like this. Okay, you see how that works? Now, let's talk about the theory behind this sequence. The Fibonacci numbers have a fascinating connection to the golden ratio, which is approximately 1.618. And you hear Matt talk about that number all the time. This ratio appears all over the place in nature, art, and architecture. It's like the universe's favorite number. So there you have it, the Fibonacci numbers and theory in a nutshell. Now go forth and impress your friends with your newfound knowledge. Just don't blame me if you start calling you Fibonacci instead of your real name. Now, let me see if this is just an illustration of how it works. It's very interesting, and we've talked about it a number of times on the show, for sure. We've even done some in-depth talking on it. But these things are, these things are interesting. When you see something that is again and again and again in nature, that can be pretty important here. I just wanted to see if there was. I thought I had another video, but it's not popping up at me at the moment. Anyway, so it will be an interesting day as well in the markets. It will be interesting as well, too, if we have some escalation of anything over in the Middle East over the weekend. So it does seem like my prediction that they're going to hold things off until after the election is playing out a bit, but that doesn't mean it's a set. It's just like our charting and everything else. It doesn't mean that that's set in and that's it, because things can change very quickly. It does appear like Trump has got this thing wrapped up. I mean, by all appearances, this is a done deal. This election over here is over. I mean, but we'll see. And that was, one of the things I said on the beginning of the show. Are you going to vote on the magic electronic voting machines, or which ones do you think are going to work more? But it appears like he's got it wrapped up. Now, we have a tremendous divide in this country, unfortunately, between the people that support Trump and the people that don't. And I think a lot of the people that support Trump, it's not that everybody thinks that Trump is so perfect or something. I mean, to be totally frank, the guy drove me nuts when he was in office. Perfectly clear. He, in my opinion, and I think obviously history has shown that I was correct, he picked the wrong person for the jobs a lot. He went too far. He got in there. He didn't go after anybody, which proved also to be a very incorrect thing to do. But I didn't want to Monday morning quarterback him, so I just kind of shut up at a certain point. And I went, built my businesses and everything else. But my point is that people are voting for him because we would like to have some optimism. We would like to end the wars. Now, he's come out with some stuff lately. It looks like he wants to go to war with Iran too. Who knows? He did come out yesterday, though, and I saw a video and say that we should not do regime change in Iran. And I was very happy to hear him say that, because that was a non-handler response. That was not a response that he was given. That was just him saying, hey, look, we can't even handle our own stuff. That's what he said. We can't even handle our own stuff. Like, we're going to get involved with Iran. Actually, there's some pretty good nuggets here I'm going to play from. But here I'm going to play this one. This one is pretty important.
tanks running around.
What's going to happen to Iran with you by the end of your administration?
I'm not asking. I would like to see Iran be very successful. The only thing is they can't have a nuclear weapon.
Are you okay with the same administration and way of governing stays, or would you like to see it go back to the 70s when Shah's was running it and Iran was one of the top 3 countries in tourism?
Yeah, we can't get totally involved in all that. I mean, we can't run ourselves. Let's face it.
Sure.
Patrick, we can't run ourselves.
You put sanctions, they don't have, the people are going to turn and flip on them. It's not going to be
tanks running around.
What's going to happen to Iran?
So that's the Trump that I know. That's the Trump that I want to vote for. We can't even run ourselves, all right? We don't need to be getting involved in regime change in Iran. That's what most people want to hear. We don't want to send our boys over to fight a war for some foreign country. That was a nice thing to hear. That was a nice thing to hear. And then he says, well, they can't have a nuclear weapon. I think they probably already have a nuclear weapon, but who knows? Then he had some really good nuggets from last night. This is pretty funny here. Trump at the Al Smith dinner. He was really funny here. These are
Gaffigan. Most recently, Jim has been playing Tim Walsh on Saturday Night Live. Gaffigan. Most recently, Jim has been playing Tim Walsh on Saturday Night Live.
Here we go.
I'd like to thank our MC this evening, Jim Gaffigan. Most recently, Jim has been playing Tim Walsh on Saturday Night Live. And that'll be a very short gig, I hope, Jim. But it was fun while it lasted, wasn't it? Let's see how that lasts. It better be quick. We don't want him, and I'm not going to say it anymore. But unfortunately, Governor Walsh isn't here himself, but don't worry, he'll say that he was. He's going to say he was. I'd like to thank
Chuck Schumer looks like he wants to die right next to him.
Coming in very, very strong a certain way. I won't tell you what way that coming in very, very strong a certain way. I won't tell you what way that is, but Chuck Schumer is here looking very glum. Doesn't he look glum? He looks glum. But look on the bright side, Chuck, considering how woke your party has become. If Kamala loses, you still have a chance to become the first woman president. Coming in very, very strong a certain way. I won't tell you. A major issue in this race is childcare, and Kamala has put forward a concept of a plan. A lot of people don't like it. The only piece of advice I would have for her in the event that she wins would be not to let her husband, Doug, anywhere near the nannies. Just keep them away. That's a nasty one. That's nasty. A major issue.
He goes on to say, I told these idiots that wrote this thing that was too hard. And he might say it on the next clip here.
There's a group called White Dudes for Harris. Have you seen this? White Dudes for Harris. Anybody know? Are some of you here? White Dudes for Harris doesn't sound like it. But I'm not worried about them at all because their wives and their wives' lovers are all voting for me. Every one of those people is voting for me. There's a group called White.
I mean, you got it. This guy, he really. Here he is talking to old Chucky Schumer. Being the schmoozer that he is. Looking quite presidential.
Ladies and gentlemen, our program is about to resume. Please take your seats. Our program is about to resume. Please take your seats. Thank you.
Man knows how to work the room. He sure does know how to work the room. There he is sitting there with the
45th President of the United States, Donald J. Trump and Mrs. Melania Trump.
I see, it's pretty funny here. All right, here we go. This is another good one.
It's a true pleasure to be with you this evening. Amazing pleasure. And these days, it's really a pleasure anywhere in New York without a subpoena for my appearance. Anytime I don't get a subpoena, I'm very happy. They've gone after me, Mr. Mayor. You're peanuts compared to what they've done to me. And you're going to be okay. But I have to be careful, however, to understand that it's a true pleasure. Mayor Adams, good luck with everything. They went after you. They went after you, Mayor. Yeah, boy, I do that. 9.5 months ago, I said, he just said something bad about the administration. He's going to be indicted any moment. And guess what happened? But you're going to win. I think you're going to win. I know you're going to win. So good luck. Good luck. I don't like what they do.
He's just sitting there, stone cold, not saying thanks or nothing. He is under the gun there. Yeah, he came out. He said that they were going to break. That New York could not handle it.
Evening. So here it goes. Tradition holds that I'm supposed to tell a few self-deprecating jokes this evening. So here it goes. Nope. I've got nothing. I've got nothing. There's nothing to say. I guess I just don't see the point of taking shots at myself when other people have been shooting at me for a hell of a long time and they shoot at. Tradition holds that I'm supposed.
No self-deprecating jokes from Trump.
Deeply disrespectful, but my opponent feels like she does not have to be here, which is deeply disrespectful to the event and in particular to our great Catholic community. Very disrespectful. The last Democrat not to attend this important event was Walter Mondale, and it did not go very well for him. He lost 49 states and he won one, Minnesota. So I said, there's no way I'm missing it. Actually, it was not easy for me to get here tonight. Because I wasn't going to miss this thing, no matter, I didn't care. I wasn't going to miss it. But that's true. Walter Mondale, 49-1. He was expected to do well, and it didn't work out. It shows you there is a God. I mean, for those people that are questioning it. I understand the real reason that she's not here is she's hunting with her running mate, spending a lot of time hunting. In any event, it's a weird. You know the word weird. They call me weird. They call JD weird. We're very solid people. This guy is calling us weird, but this was weird that the Democrat candidate is not here and with us tonight.
Funny stuff. Anyway, he was really on a roll, as he is, the great Donald Trump.
Have periods.
Oh, yeah.
I used to think the Democrats were crazy for saying that men have periods, but then I met Tim Walz. Well, I'd better wrap up because Mayor Adams told me earlier that I needed to make this one very quick, especially The city has reserved this room for a large group of illegal aliens coming in from Texas. There's a group called White Dudes for Harris. Have you seen this? White Dudes for Harris. Anybody know? Are some of you here? White Dudes for Harris doesn't sound like it. But I'm not worried about them at all because their wives and their wives' lovers are all voting for me. A major issue in this race is childcare, and Kamala has put forward a concept of a plan. A lot of people don't like it. The only piece of advice I would have for her in the event that she wins would be not to let her husband, Doug, anywhere near the nannies. Just keep him away. That's a nasty one. Chuck Schumer is here looking very glum. Doesn't he look glum? He looks glum. But look on the bright side, Chuck, considering how woke your party has become. If Kamala loses, you still have a chance to become the first woman president.
Anyway, funny stuff, guys. Like I said, I mean, by all appearances, the man has got the election in the bag. That doesn't mean much here in the U.S., unfortunately. Anything can happen. We have the magic electronic voting machines and the mail-in ballots and all that stuff. Who knows, guys? Who knows? I wanted to finish off here with a video that I have, and it's about the central bank. It's about the central bank and how they're using inflation to tax us. And it's not popping up for me real quick, so I'm gonna just look here, and if it doesn't pop up, then I will go ahead and move on. Let's see here. Central bank, I got it. Here we go. A lot of people don't know what a central bank is. It's important that you know what the central bank is. I know. He is funny. Excellent humor. I know. He is the best. He is the best. He is the best. LOL. All right, here we go.
So what is a central bank? A central bank is an institution that produces the currency of an entire nation. Based on historical precedent, two specific powers are inherent in central banking practice: the control of interest rates and the control of the money supply, or inflation. The central bank does not simply supply a government's economy with money, it loans it to them at interest. Then, through the use of increasing and decreasing the supply of money, the central bank regulates the value of the currency being issued. It is critical to understand that the entire structure of this system can only produce one thing in the long run: debt. It doesn't take a lot of ingenuity to figure this scam out. For every single dollar produced by the central bank is loaned at interest. That means every single dollar produced is actually the dollar plus a certain percent of debt based on that dollar. And since the central bank has the monopoly over the production of the currency for the entire country, and they loan each dollar out with immediate debt attached to it, where does the money to pay for the debt come from? It can only come from the central bank again, which means the central bank has to perpetually increase its money supply to temporarily cover the outstanding debt created, which in turn, since that new money is loaned out at interest as well, creates even more debt. The end result of this system without fail is slavery, for it is impossible for the government and thus the public to ever come out of the self-generating debt. At this time, the dominant families in the banking and business world were the Rockefellers, the Morgans, the Warburgs, the Rothschilds. And in the early 1900s, they sought to push once again legislation to create another central bank. However, they knew the government and public were very weary of such an institution, so they needed to create an incident to affect public opinion. So, J.P. Morgan, publicly considered a financial luminary at the time, exploited his mass influence by publishing rumors that a prominent bank in New York was insolvent or bankrupt. Morgan knew this would cause mass hysteria, which would affect other banks as well. And it did. The public, in fear of losing their deposits, immediately began mass withdrawals. Consequently, the banks were forced to call in their loans, causing the recipients to sell their property, and thus a spiral of bankruptcies, repossessions, and turmoil emerged. Putting the pieces together a few years later, Frederick Allen of Life magazine wrote, "The Morgan interests took advantage to precipitate the panic, guiding it shrewdly as it progressed." Unaware of the fraud, the Panic of 1907 led to a congressional investigation headed by Senator Nelson Aldrich, who had intimate ties to the banking cartels and later became part of the Rockefeller family through marriage. The commission, led by Aldrich, recommended a central bank should be implemented so a panic like 1907 could never happen again. And in 1913, with heavy political sponsorship by the bankers, Woodrow Wilson became president, having already agreed to sign the Federal Reserve Act in exchange for campaign support. And 2 days before Christmas, when most of Congress was at home with their families, the Federal Reserve Act was voted in, and Wilson in turn made it law. A world banking system was being set up here, a superstate controlled by international bankers, acting together to enslave the world for their own pleasure. The Fed has usurped the government. Now, the public was told that the Federal Reserve System was an economic stabilizer, and inflation and economic crises were a thing of the past. Well, as history has shown, nothing is further from the truth. The fact is, the international bankers now had a streamlined machine to expand their personal ambitions. For example, from 1914 to 1919, the Fed increased the money supply by nearly 100%. Resulting in extensive loans to small banks and the public. Then, in 1920, the Fed called in mass percentages of the outstanding money supply, thus resulting in the supporting banks having to call in huge numbers of loans, and just like 1907, bank runs, bankruptcy, and collapse occurred. Over 5,400 competitive banks outside of the Federal Reserve System collapsed, further consolidating the monopoly of a small group of international bankers. Privy to this crime, Congressman Lindbergh stepped up and said in 1921, "Under the Federal Reserve Act, panics are scientifically created. The present panic is the first scientifically created one, worked out as we figure a mathematical equation." However, the panic of 1920 was just a warm-up. From 1921 to 1929, the Fed again increased the money supply, resulting once again in extensive loans to the public and banks. There was also a fairly new type of loan called a margin loan in the stock market. Very simply, the margin loan allowed an investor to put down only 10% of a stock's price, with the other 90% being loaned through the broker. In other words, a person could own $1,000 worth of stock with only $100 down. However, there was a catch to this loan. It could be called in at any time and had to be paid within 24 hours. This is termed a margin call, and the typical result of a margin call is the selling of the stock purchased with the loan. So, a few months before October in 1929, J.D. Rockefeller, Bernard Baruch, and other insiders quietly exited the market. And on October 24, 1929, the New York financiers who furnished the margin loans started calling them in masse. This sparked an instantaneous, massive sell-off in the market, for everyone had to cover the margin loans. It then triggered mass bank runs for the same reason, in turn collapsing over 16,000 banks, enabling the conspiring international bankers to not only buy up rival banks at a discount, but to also buy up whole corporations at pennies on the dollar. It was the greatest robbery in American history. But that didn't stop there. Rather than expanding the money supply in order to recover from this economic collapse, the Fed actually contracted it, fueling one of the largest depressions in history.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.